What's good, YouTube? It's your boy Charles Enoch. You already know we back with another Invest in Myself episode. So run the intro. So today we'll be talking about how to pay your car loan off in half the time. But before we get started, make sure to hit the like and subscribe button for me. My goal is to reach 10,000 subscribers by the end of the year, and I appreciate you guys for taking the time to do so. So I have a simplified scenario on how to pay your car loan off with little interest. We'll be using 2 credit cards as our debt weapons to get the loan paid off. So let's not waste any time. You already know I have a whiteboard with a scenario, and we're going to break this thing down. Let's go. All right, so I got the whiteboard up. Let's dive into the scenario here. So we have an individual, their income is going to be $4,000. Their expenses are going to be $3,450. Cash flow, which is the income minus your expenses, the money left over is going to be $550. So this individual has a car loan of $20,000. The interest rate is going to be 10% for 60 months. Now their minimum payment per month is $450. And the total interest that will accrue if they just put the minimum payment will be $5,496.45. Now, this individual is going to have 2 credit cards. Both are going to have $10,500 on them, and they both have an offer, a balance transfer offer of 0% for 18 months with a 3% transfer fee. So we'll go to the other side of the board and I'll have some steps and we'll break this down on how this individual will pay this off in half the time. All right, so we're on the other side of the board. Now, step 1, we're going to use our balance transfer to pay off the car loan. There's a couple ways that you can use a balance transfer here. You can log in online and do the balance transfer that way. They'll ask for the car loan number. You can put it in and it'll take maybe 5 to 10 business days to pay that off. The other way is you can request for convenience checks and they'll mail that off to you, and then you can just pretty much write the check to yourself and the money will pretty much go into your account just like cash. Also, some banks, if you have an account with them, let's say like Wells Fargo or something like that, they'll actually just direct deposit that money and then there'll just be a debt on your credit card. So either way, however you do it, you want to do that balance transfer. And so for the balance transfer for credit card, number 1, you're going to have a debt of $10,300 for number 1 and a balance of $10,300 for a total of $20,600, because we have to remember there is a 3% balance transfer fee. So once you get that 10,000, they're going to charge $300 per credit card. So we're going to be at a debt of $20,600. So what this does, it's going to free up $450 of cash flow, because that's how much our minimum payment was for our car loan. So since it's paid off, that is no longer expense. So we freed up $450. Now for step 2, we're going to use our new cash flow, $1,000, to pay off the credit cards. So pretty much the income that we have coming in, $4,000, we're going to use $500 on credit card 1 and $500 on credit card 2. And we're going to do that for 18 months. So basically, after 18 months, we're going to have $9,000 on each credit card here. So let me just kind of backtrack in regards to the $1,000 cash flow. So our cash flow originally was $550. Now that we don't have a car loan, it freed up $450. You add those two together, that is $1,000 of cash flow. So that's where we're getting that $1,000. So that cash flow, you're putting $500 on one card, $500 on the other for 18 months because there is no interest being charged. So we're going to have $9,000 on each card in regards to being paid off. So Month 19, we're going to use some velocity banking here. So month 19, we're going to use $2,600 of our income, $1,300 on each card to pay it off in full, because that is pretty much what's left on the card that we need to pay off. So if we shove that money into the credit card, it pays it off in full, and we're going to avoid interest. So we're going to use the other $1,400 to pay off the expenses. So with our income, since we use $2,600 on the credit card, we have $1,400 left. We're going to throw that towards expenses. Now, the $1,600 remaining to pay off our expenses, we're going to use credit card number 1 to pay the remainder of our expenses. So with step 4, month 20, we're pretty much doing the same thing. So now, instead of putting $2,600 on there, we're only putting $1,600 on credit card number 1 to pay it off. Because remember, we had to pay $1,600 on credit card 1 for the expenses, but we avoided interest because we shoved all our income in it and paid it off. So once we put $1,600 on the credit card number 1, it pays it off in full. We're going to use the remainder of our income to pay majority of our expenses. And then we're going to use credit card number 1 again to pay the remainder of our expenses, which would only be $600. So for step number 5, month 21, we're going to use $600 of our income to pay credit card number 1 off completely. And then once we pay credit card number 1, we actually have enough income to pay the rest of our expenses. So both credit cards are paid off. Your car loan is paid off in 21 months. So that's way more than half the time of 60 months. Now, the total interest that we paid was $600, and that is the balance transfer fee. Remember, it was 3% of the $10,000 each that we took off on both cards here. So we paid the car loan off, we paid our credit cards off within 21 months. So the basic premise of this strategy here is we're using the credit card to pay off the loan, which is going to free up cash flow. We're then in turn going to use that cash flow to accelerate and pay our credit cards off in a third of the time it would take just to put the monthly payments on a credit card loan. So hopefully that made sense here. If you like this video, remember to like, share, subscribe to the channel. Like always, I appreciate you guys. Have a good day. Peace out.